Good morning, investors. Welcome to your US Market Daily Outlook. Today, we're adopting a cautiously bullish stance as the market navigates a complex economic landscape. Key drivers include robust economic growth signals from GDP and payrolls, contrasted with persistent inflationary pressures. We're also seeing significant sector-specific momentum, particularly in industrial and energy transition sectors, with GEV standing out after positive analyst sentiment. While major indices show a period of consolidation, underlying strength is evident. Investors are keenly watching the Fed's next moves and incoming economic data. For the broader market, keep an eye on S&P 500 support around 5,200 and resistance at 5,350, as these levels will dictate short-term direction. Let's dive into the economic data from today. We saw inflation tick up with CPI at 323.05, PPI at 149.671, and core PCE price index MOEM at 0.3%, indicating persistent price pressures. However, economic activity showed strong signs of growth. Non-farm payrolls surged to 73,000, a significant increase from the previous 14,000, and GDP growth rate QoQ final reversed dramatically to 3.3% from negative 0.5%. The unemployment rate saw a slight uptick to 4.2%. Meanwhile, manufacturing and services sectors showed signs of cooling, with ISM manufacturing PMI at 48 and services PMI at 50.1. The Federal Reserve held its interest rate steady at 4.5%. This mixed bag suggests the Fed remains in a wait-and-see mode, balancing inflation concerns with economic growth. The market reaction indicates a cautiously bullish sentiment, betting on the economy's resilience despite inflation. For GEV, robust GDP and infrastructure spending could provide a tailwind, offsetting some concerns about broader manufacturing slowdowns. Overall, our bias remains cautiously bullish, with a close watch on future inflation trends. Turning to the S&P 500, the index appears to be in an upward trend, but currently navigating a consolidation phase. After a recent rally, it's encountering a key resistance level. Volume has been moderate during this period, suggesting neither strong conviction from bulls nor aggressive selling from bears. A potential bull flag pattern might be forming, indicating a pause before another move higher. The immediate short-term support rests at the lower bound of this consolidation. Given the mixed economic signals, the S&P 500's ability to hold above this support will be crucial for maintaining its cautiously bullish outlook, reflecting the market's attempt to digest both strong growth and inflation concerns. The Dow Jones Industrial Average is currently exhibiting sideways movement, experiencing a minor pullback after its previous gains. It seems to be finding support around its key moving averages, indicating underlying buying interest at these levels. However, there's a visible overhead supply zone that could cap further immediate upside. The recent volume dip suggests a healthy retracement rather than a sharp sell-off, hinting at an accumulation zone for patient investors. Amidst strong non-farm payrolls and GDP data, the Dow's current posture suggests a period of digestion, with investors evaluating the impact of economic strength against inflationary pressures, maintaining a cautiously bullish outlook as long as key supports hold. Focusing on the Nasdaq, the index continues to demonstrate strong momentum, largely driven by tech leadership. It's making a breakout attempt towards new highs, suggesting robust demand. This move is accompanied by relatively high volume, lending credibility to the upward trajectory. The index appears to be in a price discovery phase, with a bullish pennant potentially forming, indicating continuation. We're also closely watching a key psychological level overhead as the next major hurdle. Despite broader concerns about inflation, the Nasdaq's performance, fueled by strong earnings expectations in the tech sector, reinforces the cautiously bullish sentiment, as economic growth tends to favor innovative companies. Looking at the VIX, the fear index is trading in a low volatility regime, currently indicating a period of market calm and perhaps some complacency. Levels below 15 generally suggest that investors perceive equity risk to be low and hedging demand is subdued. This environment supports the cautiously bullish outlook for equities, as the absence of a significant risk-off sentiment allows for growth-driven trading. While the overall market appears stable, the uptick in inflation metrics could lead to a potential reversion in volatility if the Federal Reserve's stance becomes more hawkish. However, for now, the VIX reinforces the idea of stable market conditions, benefiting specific growth stories like GE Vernova.
Now let's analyze GE Vernova's 4-hour chart. The stock closed at 634.14, showing a slight dip of 1.07% today. Price action suggests a bullish consolidation phase, trading within the upper band of the Bollinger Bands, which currently sit between 590.86 and 638.76. The middle Bollinger Band, acting as dynamic support, is at 614.81. The RSI is at 57.13, indicating healthy momentum, but not yet overbought. However, we observe a short-term bearish MACD cross, with the MACD line crossing below its signal line, and the stochastic indicator is showing signs of turning down from overbought territory at 80.51 and 85.47. Volume has seen a slight decline during this consolidation. The immediate support level to watch is the 614.81 area corresponding to the middle Bollinger Band. A break below this could signal further retracement, while holding above suggests continued bullish intent. Our bias for GEV remains cautiously bullish, with invalidation if the price decisively breaks below 590.86. Finally, let's look at the recent news for GE Vernova. Analysts have increased their forecasts and price targets for GEV following better-than-expected Q2 earnings. This positive development signals strong fundamental performance driven by robust revenue growth and improving profit margins. The market has reacted favorably to this news, reflecting increased confidence in the company's future outlook, especially given its strategic positioning in the renewable energy and infrastructure demand sectors. Key catalysts moving forward include upcoming project announcements, further clarity on government infrastructure spending, and the next earnings call. The near-term outlook for GEV remains positive, bolstered by this analyst endorsement and its strong operational performance, aligning with our cautiously bullish stance. Thank you so much for joining me today. I look forward to sharing more market insights with you in our next analysis.